Hello and welcome to the Mutual Fund Show. I'm Neeraj Shah. And over the next 25 minutes, we'll talk about a very important aspect. If real estate sales have gone through the roof, then I'm presuming that a lot of it would also have to do with housing finance companies funding those real estate purchases. We did a show like this, or in fact, an exact show like this with Vijai Mantri when we started BQ, when it was called Bloomberg Quint in 2017. And the show is aimed at helping all of us to repay our housing loan using the mutual fund route in a most effective fashion. Vijay, great having you. Thank you so much for joining in. It's almost deja vu, or actually is deja vu because we've done the same thing some time back, but we are revisiting that and at an important time.
Exactly, I think August 2017 was the time when we did that show. Exactly around 5 years back, and I was just looking at the data and I show the numbers. The only thing it changed that I got little gray hair.
And I have less hair.
Okay.
Yeah, but excellent. So, okay. So, Vijay, what's the basic premise? I mean, why is it that investors who have a housing loan should actively look at investing in mutual funds in order to repay that loan?
So there are two ways to look at it. One is that whenever you buy a house, a dream house is one room short, or it is little shorter than our expectation. So what we do when we buy a house, we stretch ourselves. Okay, to the extent that all our saving till date is put in that. We take loan and we take EMI to the maximum extent possible. And then the effort goes over next 5, 10, 20 years to repay the EMI and then get free from the burden of housing loan. And doing that, in the whole process, we are not able to create financial wealth, which is equally important. Earlier, house was considered to be one of the best asset one could have, but in changing scenario, that perhaps not be the case. Now, people need to depend more and more on financial savings to take care of their needs because now we figure out that houses are not as liquid. Second part is the kind of capital required for houses has gone up quite substantially. It is not like 5 lakh, 10 lakh, 20 lakh houses. It is like 1 crore, 2 crore, 5 crore. In city like Mumbai, a decent house is not less than 2, 3 crore, perhaps in most of the cities. So, how does one go about creating financial wealth at the same time one when one is paying EMI? So, very simple calculation we have done. And these are all historical data because you don't know what will happen to interest rate. So in absence of anything else, you look at what has been the historical average numbers are. So historical numbers on interest rate has been around 10%.
Hmm.
So if you have a 1 crore housing loan, on the 1 crore housing loan, the EMI comes to close to 1 lakh rupees. So whatever is a housing loan, 1% is EMI.
Hmm.
So in 1 crore loan, 1 lakh rupees is EMI. And the typical housing loan tenure is 20 years. So you pay housing loan 1 lakh per month. For a year, you pay 12 lakh rupees. For a 10-year period, you pay 1.2 crore. And for 20 year, you pay 2.4 crore. So in 1 crore rupees loan, you pay 2.4 crore rupees to the housing finance company. So 1 crore is your principal, 1.4 is your interest. So we give a very simple formula that whatever EMI you have, do SIP only of the one third amount of EMI.
Okay.
So suppose in the given case, 1 lakh rupees is your EMI.
Mhm.
Do SIP only of 33,000 rupees. If you do SIP of only of 33,000 rupees or a 20-year period, this 30,000 rupees, 33,000 rupees SIP will create a wealth equal to 2.5 crore rupees.
Mhm.
Yeah. So housing finance, you are repaying 2.4 crore rupees through 1 lakh rupees. Here you just take one third of that. Just do 33,000 rupees SIP and in 20-year period, you end up creating a similar kind of wealth for yourself.
Okay. So, okay, let's summarize this. I'll have a few follow-up questions to this, but let's summarize this. So, if I have taken a loan of 1 crore, right? And we are using this as basic examples. There are some assumptions out here. Viewers keep that in mind. But 1 crore, my EMI is 1 lakh. You are saying that while I'm paying that 1 lakh rupees as EMI, I should somehow figure out a way to eke out another 33,000 from my monthly income. and do an SIP of that 33,000
Very true.
for that entire tenure that I'm doing the
Very true.
repayment.
Very true.
So a lot of people, Vijay, this is the important one. A lot of people, what they would do is that they would think that if I have higher income than my EMI, and if I don't need it, repayment of a loan is now devoid of any penalties. I should repay the loan so that I get out of the home loan burden faster. You are saying don't do that. Instead, invest that money in a EMI,
Invest that money into EMI, and if you
into an SIP.
into SIP, and if you want to repay, I'll tell you the way it should be repaid. Not
Okay, you're saying
on,
that also.
yeah, there are ways one could do of repaying these things. So other alternative is that most Indian do not want burden of loan on their head, so they want to repay as much as possible. Whosoever we meet, whether it's a wealthy guy or a highly qualified person who got a professional job which is very stable, but most people don't want. Though in mathematics they understand that housing loan come at 10%, SIP is 12 to 15%. I will make more money because 2 to 5% over a 20-year period, huge wealth. But still, the burden is a burden. Asset is a different thing. So, given this kind of situation, what you can do is very simple thing. We take the same illustration: 1 crore rupees loan, 1 lakh rupees EMI. You do 33,000 rupees SIP. Okay. On that SIP, you set a target return of 12%. The moment you hit target return of 12%, and when you need to see this, you don't see for first 36 months. Okay. For first 36 months, you keep doing SIP, SIP, SIP. At the end of 36 months, you see whether your portfolio has hit 12% IRR or not, whether your SIP numbers are generating 12% return. If they are generating 12% return, then what you should do, redeem SIPs except of last 12 installment. Because why you should not redeem for last 12
months?
Last 12 months, because it will have a short-term capital gain, in some cases also exit loan. So except last 12 months, redeem everything and repay your housing loan.
What, to that extent?
To that extent. Now the question is, suppose in 36 months, your portfolio is not showing 12% IRR. Then observe it every third month after 36 months. So suppose on 36 months, your portfolio is not showing 12% IRR. Continue to do your SIP. At 39 months, see the numbers. At 42nd month, see the number. At 45th month, see the number. You will have IRR of 12% plus. It will come. Sometime it will come in. It will come in third month, third year. It will come in fourth year. Sometime it will come in fifth year. Sometime it will come in sixth year. But it will come. The day it arrives, that number, you take out, except last 12 installment, except last 12-month SIP, you take out everything and repay your housing loan. Okay. By doing that, a 20-year housing loan get repaid on an average in 12 to 13 years only.
No, wait a minute. So if I have, sorry, I'm getting a bit lost here. So if I have paid, let's say I hit 12% in the fourth year.
Yeah.
Or the fifth year, argument's sake. So I have the 4-year sum that I have put out is not equal to the whole loan.
Yeah.
So what happens after I have repaid this thing? I still continue.
Your SIP continues. Your SIP continues. Okay. You will have, on an average, you have one or maximum twice this occurrence happening in the entire 20-year period.
Okay.
Because if the SIP is delivering more than 12% return, is markets are rising. Okay. And when the market rise and you take money out at that time, and then we eventually see market goes through a phase of correction or flattish, at that time you don't create 12% IRR return. So invariably it happened once in the lifetime of the 20-year period. But if it happened earlier, then what happened? That large part of principal get repaid. So then automatically your tenure comes down dramatically. So in this case, what we are saying, suppose I'm doing a 33,000 rupees SIP. In a year, I'm doing close to 4 lakh rupees SIP. In a 3-year time, I'm doing 12 lakh rupees. And the 12% IRR may create 15, 16, 17 lakh portfolio worth. If I repay that, almost I'm repaying 20% of my housing loan in the beginning itself. So in the beginning, in the initial phase, interest component is high. So I'm taking care of the principal part, so interest component also comes down in my overall scheme of things. Now, interesting part to keep in mind, Once you do this, once you repaid your housing loan over whatever, sometime it's 12 months, sometime it is 13 months, sometime it is
Yes.
12th year, 13th year, and 14th year, sometime we do that. Then convert that EMI also into SIP.
Mhm.
Your SIP continues, convert that EMI also into SIP.
Mhm.
Suppose you started in 1994,
Mhm.
1st April 1994, you started with this assumption. At the beginning of 13th month, your entire housing loan has been repaid through this structure.
13th year.
13th year, okay. Now, 1 lakh rupees EMI get converted into SIP. Your 30,000 rupees SIP is also there. So you have 1 lakh 33,000 SIP. The portfolio value today would have been more than 8 crore rupees.
Mhm.
If we started in 1994,
Sure.
then we did for 1995, 96, 97, 98. I done this number crunching till year 2010. In last 15, 16-year period, 20-year completed period, on an average, your in a best year you paid in 10-year period, in worst you paid in 14-year period.
Ah.
So your burden comes down substantially. It also allows you the flexibility to take money out from equities, not on the basis of view, but on the basis of prefixed targets return being hit. And I'm using that money to do what? To pay the liability.
Sure.
Else, what happened? People take money from the equity market and then they sit on the cash. Markets are rising. Then they give all kind of justification why they could not participate. So I think this allows, in a very structured way, reduction of liability for the client. It also allows them continue to do SIP because you have taken money out from SIP with a plan, not based on view, and your SIP also continues. So it gives a lot of comfort to you to continue with the SIP.
Got it.
So it's a win-win situation in my opinion for most Indian investors.
Okay. Just going back to the first example, if somebody doesn't want to repay, then what happens at the end of that 20-year period?
If someone doesn't want to repay, then what happens is 33,000 SIP also create a lot of wealth for you.
Right.
Okay. Over a 20-year period, the worst the SIP would do, one third SIP, is create wealth for you, which is equal to the money you're paying to the housing finance company.
Which is 1.4 crores.
2 point total you're paying
Total
2.4.
Okay.
So you have 1 lakh rupees EMI.
Mhm.
You are paying 1 lakh rupees per month for 20 years.
Mm.
You are paying 2.4 crore rupees.
Yes.
Now you just take one third of that
Mhm.
and you create equal value.
So that's the
2.4.
worst case scenario.
That's the worst case
What's
scenario.
the best case scenario?
Best scenario, let's not talk. It can go up to 3 crore, 3.5 crore rupees.
Oh, okay.
We're just assuming the worst case scenario. And we're just assuming large cap only. People can do that into small and mid cap or a 20-year period and could be much better.
Yeah. So before I ask one more question, I would, because a lot of people would be wanting to know what kind of funds do you reckon? So if you were doing it for yourself, Vijay, the same thing, not that you need to, but if you had to do it, what kind of funds would you choose?
I will choose multi-cap fund.
You will choose a multi-cap fund. So you put all the proceeds, that 33,000 rupees, in a multi-cap fund.
Multi-cap or flexi-cap, by and large, they are structurally not very different. And it doesn't matter. You can pick 3, 4 funds. You can pick 3 funds, 2 funds. You can pick 1 fund. It doesn't matter.
Why a flexi cap or why a multi cap?
See, why flexi cap? Because you are giving that burden to the fund manager to decide where they see more value, whether they see value in large cap, mid cap, small cap. Else, what happened? Individual investors has lost lots of wealth in investing on or not investing on the base of their views. And interestingly, there's a solution to the money invested and the market corrected, but there's no solution to the money who's not been invested.
Sure, I get your point. Okay. Now, Vijay, one very important question. You mentioned at the start, right, that a lot of people max out their savings, they take the maximum possible loan because they've seen that good house. They don't want to let it go, even if it is slightly beyond budget, right? So for those people who are paying that 1 lakh rupee EMI and they are maxed out, to take out another 33,000 is a difficult task.
It's
So
very
what do those
difficult.
people do?
It's very difficult because, as I told you, a dream house is always one room short.
Right.
And when you're buying a house, even your parents, grandparents, family, friend, everybody will say stretch. ले लो यार क्या फर्क पड़ता है पहले एक घर रोज रोज थोड़ी लिया
पंगा ले लो.
हाँ just do घर रोज रोज थोड़ी लिया जाता है. So we end up stretching ourselves, and when we have a dream house, people come and see, they compliment us, we feel very nice about it. Nobody knows what is happening. to my cash flow. But this is what happened typically. So what should you do in this kind of situation? I understand that you may not have saving left after paying the EMI. So do nothing for first 3 years. So once you've taken a housing loan, just pay EMI for first 36 months. Okay?
Mhm.
Do nothing.
Hmm.
And perhaps in 3 years period, your income level will go up. Perhaps. Okay. COVID has taught us that is also not possible. But now salaries are increasing, income levels are rising. So again, we'll go back to the normal world. So don't do anything for 36 months. After 36 months, start with again one third SIP amount of one third of EMI, and then increase this SIP amount by 10% per annum. So in the given case, you had a 1 lakh rupees EMI, 33,000 rupees SIP. You didn't do for first 36 months. From 37th month, you started with the SIP of 33,000 rupees.
Mhm.
You did that for 37th month to 48th month, basically fourth year.
Mhm.
And then from 48th month, 49th month, you added up 33,000 plus 3,300.
Okay.
So you made SIP of
Step up.
36,300 rupees from fourth to fifth year, and then you keep adding 10%, 10%, 10%. Again, you will end up creating a wealth of more than 2.4 crore.
Okay. But in this case, you don't have to watch out for that 12%.
You can also do the same thing.
You can
You
do
can do absolutely. You can do same thing. You can set the 12% return target.
Why this 12%?
You can do 14%, 15%.
Acha,
See,
okay.
is just number we have taken.
Okay,
Because the
okay.
moment you say 15%, you will say, why 15%? Why not 18? Why not 10, 12?
You're
An
taking a number 12.
investor can pick their own number,
Okay.
whatever they feel comfortable. My suggestion to you, just take 4% higher than the housing loan number, by and
Mhm.
large. I think that will do a job for you.
And also, it kind of brings about the plan and the discipline into the whole process.
Absolutely.
So it's not ad hoc.
Yeah, yeah.
Okay, great. So for a bunch of housing loan borrowers, this could be great news. Any final tips, Vijay, before we wrap up this show? Because this is tremendous. I think a lot of people will be getting on the calculators and trying to do that. And I must tell, just before we take the final tip, I must say that some of this math would be there on the show as well. So you could refer to that, or we publish a story on this whole episode a bit later on in the week, on the weekend. So you'll be able to read all of that as well. This story will get vetted by Vijay Mantri if all is okay or no. But Vijay, any final tips?
The final tip is that just stay disciplined in whatever you do, or in the investing, or even in borrowing, and follow this strategy. And what I have seen is very interesting. People do actually counterintuitive thing.
Mhm.
So when SIP is hitting more than 12%, the markets are looking very good. The news flow is also very positive. At that time, many investors don't take money out. They believe कि अभी तो अच्छा चल रहा है, चलने दो. And when SIP are not doing well because the markets are not doing well, the SIP numbers are not looking good, news flow is also negative. That is the time they stop investing in SIP. Don't do that. If you believe market is stopping, I think that is the best time to take money out. See, what is the best time to brag up? What is the best time to sell about your investment? When you feel like bragging about it. So that is what you should do. And you are not taking money out and keeping in cash.
Sure, sure,
You are paying a liability. Your family will be very happy about it.
sure.
So I think just follow that strategy.
Great. Okay, Vijay, thanks so much for getting us this math and doing this show once again with us.
Pleasure is entirely mine, and many congratulations to BQ.
Yep. Thank you so much. Well, one just hopes that it helps a lot of people in creating wealth enough for their housing loan. Thanks so much, viewers, for tuning in today.